Hi, thank you for visiting GuruFocus.com. My name is Charlie TM, the founder and CEO of GuruFocus.com. Today, I want to talk about the yield curve. A yield curve has been paid a lot of attention because historically, it has been a good indicator of future economic recessions. Let me show you with my screen here. Okay, this is GuruFocus yield curve page. You can always find it under the market manual. And this is the third one, US Treasury yield curve. And here, of course, on the top, we list the current yield of different Treasury bills and Treasury bonds. The shortest one is 1 month yield. Currently, it's 2.209%. The 10-year rate is 2.782. The 2-year, 1-year rate is about 3.2%. And if you think the bond, this is bond yield. If you think bond is your borrowing money, the lending money, and the longer the term is, the rate should be higher. The higher the rate should be, right? Because there are a lot more uncertainties in long term, in 10 years than in 1 year. So in principle, the 1-year yield, 1-year Treasury yield should be lower than the 10-year Treasury yield. But that's not always the case. And there's a spread between the 1-year Treasury yield and 10-year Treasury yield. And which the difference, we use the 10-year Treasury yield, subtract the 1-year Treasury yield. We calculate the spread, which is this curve. You can see that's a historical, the blue line, historical value of the yield spread, 10-year versus 1-year yield spread from the 1960s. And this gray area is a US recession. And when the 10-year yield is lower than the 1-year yield, we call it a yield inversion. Because when it's yield inversion, this blue line will be under the right horizontal line. And you can see this here. There was a yield inversion here in 1970s again, 1980 again, deep yield inversion when there was high inflation, and also 1990s, before 1990, and the year 2001, and also financial crisis during 2007, 2008. And we also observed one before the pandemic, yield inversion, March of 2020. And also currently, as of today, August 15th of 2022, the yield is inverted. And if we observe that for every yield inversion, there's a gray area that there is a US recession followed it. There was one. And so the yield inversion has been a very good indicator of recessions. Currently, we are in one yield inversion. We have had 2 consecutive GDP declines, but we were told that we're not in recession yet because recession also considers other factors like unemployment rate, the growth rate of the business, etc. And will we have a recession next year or the year after? At least historically, history told us that might be, and there most likely will be. But it's currently, look at this. This is called a yield curve. We draw all the yield, different time of Treasury yield together, and currently it's close to a flat line. So it's called yield flattening. And now it's 10-year versus 10-year is here, 10-year versus 2-year, 1 year, it's inverted because 10-year rate is now lower than the 1-year rate. But look at 1 year ago, last year, same time, the yield curve was very steep. It's not inverted at all. And 2 years ago, it was not inverted at all. And so this year, it is different. It behaves different. And this chart shows a 2-year, 10-year versus 2-year spread, yield spread. Again, it's a very good indicator, similar to 1-year yield, 10-year to 1 year versus 1-year yield spread, and it's inverted also. And here you can see the historical yield 10-year and 1-year yield. We draw them together when these two lines overlap with the black line is above the green line. It's inverted as of current. You can draw anytime to anytime. You can see the yield curve like that, yield curve here, and here like when it's inverted, you can see the yield is so flat here. There's a recession followed again before the financial crisis here, and yield was inverted, and there was a recession. So this is an interactive chart. You can play with it. You can look at the yield curve of any time from 1960s and observe the relationship. And this is SP 500. Clearly, when recession comes, the SP 500 declines, but usually it's a good time to buy. This is a chart for the 10-year Treasury yield versus the SP 500 yield, the PE ratio of SP 500. And we can see that as the 10-year Treasury yield goes down, the PE ratio overall has been going up, and gives you a very good historical perspective as well. You can always learn more by reading this part. Of course, you can always contact us from the support link here. You can chat with us. We have the chat support, and you can also create a ticket here. You can schedule a meeting also with us. Of course, you can call us. You can visit us in our Plano, Texas office here also. And I may talk to you personally, meet you personally. I'll be very glad to thank you for being a long-term, being a subscriber of GuruFocus, or being a future subscriber of GuruFocus as well. Again, my name is Charlie Tian. I'm the founder and CEO of GuruFocus. Thank you.